Now we're going to talk about the Nasdaq and the S&P 500, but we need to talk about some of this news that's currently coming out. We need to talk about, like, should this be affecting the way that we're attacking this market this week and the way that we're visualizing the overall movement going into such a big day as Wednesday, because Wednesday will ultimately be maybe the tide changer of the market, right? That's the main focus of this week. Now, when we get into this, this is important to realize this is news that was just released today and over the past like 10, 12 hours. So we need to talk about this specifically before we get into those technicals on what we need to be looking for. Now, when we look at what's happening, again, one of the best, in my opinion, one of the best sources or updates on news to get news as quickly as possible and decipher what's true, what's false, has been Twitter lately. Okay. Now, again, I hate rushing to Twitter and seeing some of these pictures, any type of diagram drawn and say this is what's happening. I like to go fact check it as much as possible, right? So one thing that's important to realize, and that's been all over the internet right now, is that China is currently simulating all these attacks, war strategies surrounding Taiwan. But it's important to understand where this began. Now, again, I'm not saying this is America's fault. I'm not saying it's Taiwan's fault. I'm not saying it's China's fault. This is just where it began as of the past, 5 days, give or take. So we basically here in America invited Taiwan nationals, the president, to come over here. They came over, had this conversation, but we knew already, even Pelosi, even getting any type of, leaders from America visiting Taiwan caused major issues, caused major problems. And then we kind of further this by inviting, Taiwan's president over here. Despite what's happening with the petrodollar, despite what's happening in Ukraine, despite what's happening with the further strengthening of the relationships between Russia and China, it almost seems like we're dumping, fuel on the fire here. Dangerous. So that's what we're looking at right now. That's the concern. Before we get into any more content, before we get to the charts and what's happening there and we break down the concerns with this, I have to ask you to consider doing two things. Consider liking, consider subscribing. Every single day on the channel, we make videos for you. Monday through Friday, stock market updates. Saturday, educational videos. Sundays will officially be the new day for the podcast or further market breakdowns on a broad scheme and more long form content around the market, what to be looking for, and more in-depth reviews, right? Not so much short reviews there. That's going to be the focus going on to these Sundays. So make sure you like, subscribe, check it out. It helps out tremendously. And if you get nothing out of this, feel free to unsubscribe. I don't ever want people to feel pressured to subscribe or anything like that. I never want to be like that type of guy. Also, too, it's Sunday. It's newsletter day. The newsletter is dropping. The link is down below. You scroll down. This is what it is. It's absolutely free. You can see all the past newsletters. So you can check how serious and how, in my opinion, good this newsletter is to prepare you each and every week for what's happening on the technical side of things. We do know technicals are important, and this is going to show you every key level on major indexes, the top 3, Dow, ES, and Nasdaq. Most likely, sometimes we'll add in the Russell as well, and then a few stocks that we're watching there. Already over 3,000 readers in the past 2 to 3 months that have already signed up and joined. So make sure you're checking out. This is 100% free. We're not selling you anything. This is what it looks like every single week. And as you can see, we're not selling you a thing inside of this newsletter. You can go through you have the news reports that are coming out throughout the week, earnings. That's it. We're not selling you anything. There's nothing. There's a coupon for TrendSpotter at the end. That's it. Nothing at all. So again, check it out. Let's get back into the video. So again, when I go over anything regarding, China and stuff, it's really tricky because we don't want to have this agenda of pushing anything. We don't want to have this agenda of trying to push a thesis out there to get a response in the market that we want to see. It's important that we look at this for what it is. Now, when we look at China, I'm going to tell you something before we even go too in depth. And this is Financial Juice. I always recommend looking at them for the news because they're basically just funneling out Bloomberg terminal news and just throwing it on Twitter for free and on their platform. Now, when we look at what's happening here, and I want to say something before we even go into this, and they basically, this is all from Chinese state media. This is not even from them. So China right now, in my opinion, we're trying to flex and show our strength. That's what's happening. We have America almost daring China to do something, and then we have China doing what they want to do. And before anyone goes and says, well, America is not going to do anything. America is not going to do anything. Again, whatever you may believe, whoever you support, I don't care. But if you look, the president of the United States, Joe Biden, has said on several occasions that the U.S. will intervene if China attacks the island, which is Taiwan. But U.S. messaging has been murky. Okay, so if it is under the assumption, based on threats, based on everything that we've said, if this were to happen, it would spark, some type of reaction from America, not just giving them, weapons like in Ukraine. That's so far what our state media has said, what, the president has said. That's the understanding there. So we need to understand that. Now we have China, and I find it interesting that China, this is what they're doing. And again, China, they're being very public with this. And this is the part of, it's not really a secret, and you would assume if you're planning some type of attack like this, you would be keeping it somewhat of a secret. So Chinese state media, we can see all their releases. You can go check for yourself. We're continuing drills around China. We're surrounding them. We're keeping momentum and circling Taiwan Island with drills. And then they said we carried out simulated precision strikes on essential targets on Taiwan Island and surrounding waters. So again, is this a move of just, trying to intimidate, to show America who's boss? So Taiwan, who's really there? Where should their allegiance really lie? Is it a scare tactics? We don't know. So that's what we need to be prepared for this week. So initial response as we look at technicals, as we come out of the gate, I assume we have a little bit of potential downside to start the week. I'm going to tell you that right now. But a few things we need to identify of where things actually get bearish here on the chart before you jump to any conclusions. Now, also too, I mentioned Wednesday was a big day. That is CPI day. If you don't know, CPI day is going to be very influential, very big on the market. It's going to be probably one of the last things that really pushes us over the edge into the next FOMC meeting. We have PPI, we might even have PCE, but CPI definitely setting the trend, especially with what's happening with oil and what's happening with crude specifically here in the United States as well. We'll talk about that here in a second. But you can see February highs. You see we break up. This is the daily chart. We break up 1, 2, 3, 4, 5 days basically above this level, and then we retest perfectly and mount. Now, if you were here on the channel from Wednesday and Thursday, we talked about this level specifically. We said if we come down, this is the level to watch. If you bounce at this level, you have to remain bullish, right? What is this? What is the overall thesis here from a technical point of view? Because there's 2 point of views you have to be listening to and watching, right? There's the technical and there's the fundamental. Now, for the past 3 months, I think we can agree that fundamentally there's been no great news. If there's been any good news, it's been that the Fed has said we're not going to let banks collapse. We're going to dump endless amounts of money into those banks. And on the other side of possibly pausing rates very soon, which I do think they're going to pause rates. We've been saying since November, they were going to run rates, get them down to 25, and then they were going to run that into summer. And that's when we anticipated them to pause rates near July and then keep them flat throughout the end of the year. That's the expectation from my point of view here. Now, when we look at this chart, I want to say something. From a technical point of view, going through January, there's no reason to look for downside here. Ever since we broke local highs of 12.1, there has been zero logical reason to assume downside here on the market. Why? Because all you're doing is making higher lows on repeat, on repeat, on repeat. This is a basic structure to the upside, whether you want to admit it or not. I don't care. It doesn't matter to me. Do whatever you got to do that helps you sleep at night. But again, so far, if we look here, all we are doing on each pullback is making a new higher low every single time. Going all the way back really to October, if you really look here. But this is what's happening, and they're getting more and more aggressive, specifically here on higher time frames. And I want you to really look. But what I really want to pay attention to is the upside on this, right? The bottom side, no matter what, it doesn't really matter if we draw this as a channel or not. But what you can see, no matter how you draw it, is that you are making higher lows. The end, right? That's what's happening, right? And then on the upside, you're making higher highs on all of these swing pushes, right? Every time we pivot, we are making swing highs. The only area that we had some problems was down here, maybe, right? We broke out of that overall trend. I don't want to talk too much about that right now, but as you can see right here, we broke over this overall trend, the big level we had to get, above. We held there from October into the, the beginning of January, and then we broke through it near the end of January, beginning of February, mounted, pushed back up. This is Nasdaq, okay? Now, why do we watch Nasdaq? And I know people are going to say, Tyler, well, ES isn't as bullish. Dow's not as, well, Dow is bullish, but if we go into ES, obviously it's not as strong, right? You haven't broken over February highs yet. You're lagging a little bit here. But what's one thing that we know? If we go back and track what happened from 2020, right? If we go back from 2020, we go back even further than 2018, what was leading the market on each time we would push to all-time highs? Was it the Dow? No. Was it the ES? No. It was the Nasdaq. Why? Because tech is what's ultimately going to lead our market. Tech is where you look at it when you're investing, and that's a risk on approach, okay? Because if you're going heavy into tech, that's ultimately the future of the market, but it's also the most volatile sector of the market. So when we look at it, right, and we look at something like, Caterpillar, right? This is an industrial. If you look at, you have some volatility here, but overall, this chart isn't really that volatile. It's not that crazy. Since 2021, I mean, we're just kind of sideways chopping here. Nothing crazy. John Deere, right? What happened here? You had that really big plummet with some of that news back in July, but you came back up. And if you really zoom out here, you're just in this range, still mounting highs from 2021. You're still looking great, right? This is ultimately not that bad of a market where you're at. But if we go into something like, let's say, I don't want to use Tesla because it's overly bearish. I don't want to use Meta. We can go into anything, right? It's funny. We'll go through all of them. Netflix, tanks, right? Down to 150, destroys 20, COVID levels. Meta destroys COVID levels. I mean, is this a sideways chart? No, it's not. We can go over Microsoft, big name. It's battling back. Don't get me wrong, but you push up. This is 2021, and then boom, straight down. Not too much chop. Not any of that action. Tesla, what happened this year? Boom, rejection, 420 down to 100. Are you kidding me? The list goes on. Even Apple to a certain extent, right? Apple's maybe the only sideways one you could argue, but you're still coming almost down to, almost 2021 lows here in March, right? So we need to consider where we're at and how we're moving. This is probably the most bullish one that there may be. I can go through NVIDIA and semiconductors as well, right? We've seen the rally back, but look at what's happening there. Look at these gnarly drops. I can go on and on and on. That we've had a major pullback. But what is leading us right now? Well, is Caterpillar, is industrials, is that the sector of the market that's leading us? No. Where we're bouncing back the strongest right now is tech. And so this is when you have the most strength, in my opinion, on bounce backs. For instance, if we go back to what happened, back in August, when we had that nice bounce from end of summer into, beginning of fall, tech had a nice bounce, but it was short-lived. It was a quick run up and then it was done. Look at the run that we're having now. Steady to the upside. And so this is like true movement that you would like to see. So from a technical standpoint, all I'm saying here is you can't jump to conclusions and say, oh, well, this has to come collapsing down. No, it doesn't. It doesn't, because all you're doing now is mounting previous highs. If that's all you're doing, you're just stair-stepping to the upside. You make a high, you push above, you mount, you make another high, you mount. And that's all you're doing at the end of the day here on higher time frames, daily, weekly, monthly. That's what you're doing. Whether you like to say it or not, I don't care. That's what's happening. When we go to shorter time frames, yes, the 5 to maybe 30 minute, 1 hour, you can convince yourself there's some, bearish activity happening there. But that's when you look for. But what I will say from that is to not jump to conclusions and assume that we have to break up, because we have such influential news coming up very soon. We also have this China shit that's happening that could react in turmoil for the market. So it's a catch-22 with where we're at now. I will say this though. It's my famous line here on the channel. Remain a little bit patient, guys. Remain a little bit patient. Where do we make all of our money? On the breakouts, on the confirmation to the upside, to the downside. We don't really care how we move. Yeah, you get your long-term stocks. Keep them there. Don't look at them. Close your eyes, blah, 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 blah. You don't care about how those move, right? Those are long-term, minimum 3 to 5 years, minimum. That's long-term, right? That shouldn't even consider long-term, but that, whatever, we'll put that for the day, minimum. But day trading, you have to react. You have to watch what's happening in this market and play out possible scenarios. And right now, if we look here, there's no reason for us to be hammering options to the upside. Granted, you're on the daily chart, flagging once again to the daily 9 EMA and breaking them. This has been an overall great trend since the beginning of March. Like, don't get me wrong. It's been fantastic. However, we cannot be, oblivious to what's happening out here with this news, and it's going to continue to ramp up as well, though, with inflation numbers. And I know people here are going to have a lot of questions about inflation numbers. I want to go look at oil real quick. When we look at oil, when we look at what's happening here, there's some cause for concern. There really is. We saw what happened from oil, and we've been talking about this, right? Buffett, funny enough, buys Oxy near lows anyways, and you bounce up to 82. So we were trading in this range essentially from, early November into basically end of March. And then oil obviously dropped from 80 down to 64. Everyone's like, oh, oil's going to drop. It's this, it's that. It's funny. I'm like, guys, no, it's not. It's not. The petrodollar has just been destroyed. That's what's happening here. So US crude prices are all over the place. But then what happens from basically March 23rd or March 20th into today? Almost 2 weeks, give or take, of trading. Let's just zoom in here. About 14 days of trading, not even a little bit less than that. You push up overall 30% on the price on oil. I want you to understand what's happening. Commodities should not be moving this way. You should not be moving in, a week and a half, 15% to the upside, because it shows you that they're not stable. It shows the most dangerous part in the market: uncertainty, not reliable movement. This is the X factor on inflation right now, right? I don't think this is going to negatively affect our CPI, just based on a few things, right? Understand this. On this CPI reading, on this PPI, it should not affect us, right? Next one, it probably will, because we'll see that we'll have all this information and oil prices dropping, gas prices dropping down here, and they spike near the end of March. So we're not going to get that reading this early on in the CPI reading, okay? It's not going to happen. I don't care what you say. And if you do get a high reading, that would be very bad, because that means the next CPI, if we even maintain above 77 on oil, would be very detrimental to our economy. So we have to understand a few things that would take place there. Does that mean I'm logging CPI? No, that does not mean that. But it means I'm being very cautious, that I'm not overly zealous to playing the downside opportunity. There's a difference there, right? There's a difference. It's not a gimme. I think a lot of people are assuming, oh, well, oil's pumping, right? Inflation's going to come back. They got to start raising rates more. No, that's not what it means. That is not what it means. So we need to understand that. That's where I'd be sitting there as well. And then I have to also be able to identify, where is VIX? VIX over the past 2 years, almost 2 years now, going back, really going all the way back to 2020. If you really look at it, between this 18 and $16 range has been one of the best buys on the market, right? It's been one of the best, if not the best hedge on the market as well. And if we look here, you're right back at this range. Every time we've come down here, over the next 2 to 3 days, we've shot up. We've bounced heavily on the VIX. Now, it's important to understand, VIX moves on multiple different things. VIX is not going to move, and does not mean it has to go up only if the S&P goes down. You need to understand that. The VIX is a measure of the derivatives market on the SPX. Okay, options, right? It's an inflow of options, giving you the best visual here. And this is gonna probably blow some minds, because people are like, oh, well, Tyler, that's not true. Everything I say here, I recommend you go fact check. It's not financial advice. Go fact check everything I say, because you should learn. You should be focused on learning, and not just, oh, well, Tyler said this, so now I got to trade, right? This is what's going to happen. Understand this. And I want to take you back to SPY. Okay, so when we go to SPY, look at when you had the dip back here in February, right? So when we had the big dip, I want to come back here into March. So March 6th is when you top out. You start getting aggressive to the downside. And the 9th is when you have your first big day. Then the 10th is when you have another one. Now, when we go to VIX, look at what happens here. Okay, hear me out. When do you start bouncing? So you bounce into the 3rd, 6th, 7th, 8th, and then the 9th is the first day you really get a bounce, right? But until then, you only move about 50 cents. Very minuscule movement. Going back to SPY, remember, you get your first big drop here on the 7th, then your second one on the 9th. So what happens in this period? Why did VIX not shoot up heavily on the 7th, right? I mean, the move was arguably the same size as this, as the same move as on the 9th. Because the derivatives market, okay, that's what affects the VIX. Stop following Twitter people, stop following Instagram people, stop following YouTube people that don't understand what they're talking about. A simple Google search will tell you what moves the VIX. It is the derivatives market, right? And so once you saw that volatility happen, then you obviously saw options start flowing in, short data contracts between retail and even institutional to hedge positions. And that's what happened. Then you saw the big flow, the giant push. And then ultimately you stayed here where you just shot back and forth. Even though there was necessarily no great movement to the downside on SPY or SPX, guess what happened? You would bounce from 24 up to 30 to 24 to 30, 24 to 30 for the next 5 to 7 days. Okay, so understand that's what really moves this VIX market. It's not just the S&P moving up and down. You got to understand that. So if anything, if you're looking at upside here, if you're looking to trade upside, I think VIX is a great hedge option, and you could really hedge most of a position to pennies on the dollar. That's the really cool thing about trading VIX as well, if you know when to take opportunity and when to use the VIX to your advantage, okay? And it's pretty interesting that we have all this kind of catalyst news happening at once, and then on top of like the Chinese stuff. But the real question is what's going to happen here, okay? What's going to happen with China, what's going to escalate there. But we can't worry too much about that. And until something actually happens, I don't think you can start being hyper concerned, because this has been like a threat for like the past year. This has been something that's been happening. And it's like, does China actually do it? I'm not hoping they do it. I'm just saying, like, do they actually? We just don't know. The main focus this week has to be CPI, though. Wednesday CPI is everything. That's all that matters. If that comes out good, the market will boom. You will have a good next few days, 100%. Going into that, though, that's the main question. And if you're looking here about how to trade going into CPI, again, the number one thing that you're watching, going back to NQ, is 12.95 roughly, 12.950, right? The February highs. That's all you care about. That is the most influential technical part of this chart. As long as you remain above that, I don't believe you can be that bearish. You can't. I don't really care what you say. It is what it is. You're bullish as long as you're above 12.95. Giving you a reaction as well. The last thing I'm going to leave you with here. Look at how you move down. You move down from 13.2 down to that level over the next like day and a half, 2 days, right? Look at the instantaneous reaction from that level. People want to talk about, this is a rug pull, and everyone was commenting on those videos. Go look. They were commenting like, Tyler, this is a rug pull. You're dumb. You're this, you're that. I wasn't even in really any trades. I had some stock. That was it, right? Just some stock. Look at the reaction. Who would you argue is stronger in this case? The sellers that took 2 days to get you there, or the buyers that took 2.5 hours to push you back up to highs? Just saying. But that's where we are right now. So again, until you break below this level, there's no reason to panic. There's no reason to get crazy. And your risk reward remains to the upside, to be quite honest. That's just where we're at right now. But again, I'm being cautious going into the beginning of the week with the knowledge that maybe the market reacts to some fear from Taiwan. And then I'm looking to see if we can hold this 13,000, 12.95 going into Wednesday, right? And then I'll start, if I have any scalps, I'll start to be looking for scalps to the upside maybe into Wednesday, and that'd be it. But CPI, most important, keep your head on a swivel. You need to be paying attention closely to that. If you have questions, comment down below. We'd love to go over those questions. Have a good one, traders.